Hi friends, time for the stock market update. Are you as excited as I am? I bet you are. That's why you're staying up for this. Okay, highlight of your week. Bull market since 1947. And we are now officially in a bull market with the S&P 500 because since 10th of December 2022, it is now up some 34 odd percent. The bull market's been going on for a while. Now, here's the good news. The total gain of various bull markets is 156%. The average is 156% and the median is 101%. We're only at 34. Yeah, I know, it's going to be big. And they tend to last, well, about 4 times longer than this one has so far. Does that mean we've got another 3 years of bull market? Let me come to that. Okay, I'll come to that. By the way, if you're on TikTok, watch out for all of these fake accounts and more. There's about 1,000 of them. I'm in discussions with TikTok on them getting rid of it because that's my face, so breach of copyright. That's trademarked. The whole name is trademarked, so breach of intellectual property. If any of these accounts on TikTok reach out to you to have a private discussion, it ain't me. I'm sorry. I've got a life. I haven't got time to have private discussions with you on TikTok. So be careful, okay? And they usually want to get you on Telegram and sell you through private chat some crypto crap. Feel free to waste their time, by the way. Most popular AI tools of the year, I thought it was interesting. Which are the most popular ones and the number of users and industry total, Quillbot and Midjourney. You might want to check these out, actually, if like me, you're into AI. I hadn't even heard of some of them. Okay, so now, how are we doing on price to forward earnings? So this is a P ratio. It's a measure of valuation, share price compared to expected profitability. Okay, Verizon, cheap. AT&T, cheap. Energy looks cheap, but these aren't the only measures of whether a company will perform, because as well as value, if you're on my Great Investments program, you'll know growth and dividend yields are critical, as are cash flow measures. But just because PE is popular, I thought I'd show you what looks cheap. Don't forget, I will be looking at value, growth, income, cash return on capital invested, momentum, Sortino, ANA, for all of these things across 10,000 stocks when I come to all these conclusions. So, how was the performance over the past week? Well, not bad, hey? Look at that little baby. And Broadcom, and Salesforce, and ServiceNow as well. Look at you, ain't you doing well? Not a good week for Muskie. And utilities got shafted. Okay, so tech seems to be back. There doesn't seem to be a rotation into healthcare, which I thought there might be. Well, it's early days to tell, but we'll see. We're keeping an eye on it. But it really does seem to be an extension of last year so far. Exchange traded funds, that's how they're doing. I will do videos on some of these. Now, they're doing better on healthcare. Okay, that's where we are with China completely getting screwed. Now, at some point, somebody will say, isn't it cheap? Some people sent their pension portfolios into me, which, as you know, I'll analyze. And one poor chap had Chinese funds, and over the last 5 years is down 40% on those. Somebody else had Scottish Mortgage Trust and is down 50%. So it's not just China, it's Britain as well, which is sort of getting screwed. The UK markets are down 3.3%, thank you very much. The Nasdaq is up year to date, nearly 1% so far. These are the top performers over the past month. On the S&P 500, I don't own any of these, and it's just pure momentum. It's not value, growth, income, so they haven't come up on my system. And this is for the FTSE 350. It's just pure momentum, hasn't come up on my system. These are the S&P forecasts. Now, JP Morgan thinks the S&P is going to do this, and Yardeni Research think it's going to do that. And that shows you how many different firms think different things. Great. Wall Street, yeah. All the smartest people all change from different firms, and they have got views, not just which are a little bit out, they can't even bloody decide if it's going to go up or down. Useful, eh? S&P 500, that's my bullish projection, 25% over there. And I'd expect the moving average, convergence, divergence to be doing this as it had historically done before. That's why the bullish projection puts me there. The base case is elsewhere. Well, to be honest, the base case would be that, and the bear case would be that, wouldn't it? Duh. All right. FTSE, so if your pension fund or workplace pension, and check it out, is tracking the FTSE, which it almost certainly is, then it's probably made next to zero gains over the last 5 years, and you might want to have a look at the links in the bio on alpeshpatel.com/links. I've got now a new conspiracy theory, and I'm not into conspiracy theories, which is your employer wants you in rubbish funds, because imagine if your pension did go up 55% like the NASDAQ did last year, you might leave their firm. So they probably want you in rubbish funds, so you don't leave, because you don't ever have enough money to retire. You have to work longer and you're beholden to them. NASDAQ, all-time high. Well done, congratulations. Now, the monthly MACD went up. It often touches and dips to kiss its own moving average and then moves up. You thought I was going to say something else then, didn't you? Okay, and does that. Apple, it's on an upward trend, all fine, and now it's had some positive news because Bank of America got their act in order and said it's a buy. So that's helped trigger a bit more of this upside. Good, all fine. What's my Apple strategy? Would I buy, hold, or sell? Well, I certainly wouldn't sell, as you know. I continue holding what I've got. Would I buy, if you put a gun to my head? Yes. Would I do 2 times leverage? That's high risk. Yes. So that's the Apple strategy. Alphabet, sorry, great investment members only. Microsoft, I do the Apple strategy on every aspect of what I just said for the reasons that I've already said. Amazon, sorry, great investments program, users only. Now, Disney was a special situation earlier in the year. It sort of fell back and wait, so it's more weight, even though lots of analysts like it. Don't forget, on YouTube, you'll get all my other videos on why your pension fund manager should be sacked. Well, actually, more than sacked, should be bloody locked up. Nvidia. Now, remember the Nvidia strategy, which is the same strategy for every stock. If it drops X%, you would sell Y, and Y is dependent upon your risk appetite. So if it drops 10, you'd sell Y. If it drops 20, you'd sell Y1. If it drops 25, you'd sell Y2. And that has meant that you didn't get out here, even though I got a bit worried it was overbought and might drop off because the weekly was dropping. But no, it went to even higher highs. And so you're still in. Congratulations, you're welcome. I'm teetotal, but feel free to send me a bottle of champagne. And you continued adopting the Nvidia strategy. Now, Tesla, as you know, was a special situation last year. It made us great little return until it dropped off here when I exited, because I thought, you know what, I want to get it, I want to reduce out of my special situations, reduce my holdings in equities, and it went up a bit, it's come back down a bit, and at the moment that doesn't look very positive, does it? So we'll wait. It's not going to become a special situation anytime soon. Simple. That's great investments only, and so is ServiceNow. And some of the special situations which I do post on Telegram, like Intel last year, that's what was posted on the 14th, and by the end of the year, 54%, not bad. Well, the NASDAQ was up 55, so Netflix, not one I own, but I show you this because I know it's popular and that's where it is. Now, this is important with all of these. That's now getting in an upward direction. It's really good. I'm not saying necessarily buy it now. I'm saying that's where we projected it. That's where we've got, and we're about halfway to it already. You're welcome. Don't forget, I've got 1 million views now on YouTube. If you've got a rubbish fund, send it in. I'll analyze it. I'll humiliate and embarrass the fund manager in public on YouTube, such as these guys, and give them a rating and give a detailed analysis of why they're losing you money. Popular with hedge funds, but not for me. General Electric, for instance, bit toppy, still at the top. Similarly, Cisco, not for me, but I'm just saying popular with hedge funds. Okay. Similarly, as I said on YouTube, I'm not meeting the king again, but I wish him well. That's the biggest personal news there was. Have a look at the funds in your ISA or SIP or pension, because there's more reviews there. And I've continued to get in great reviews. If you want to see the reviews for my work, have a look at that. Don't worry, there's more to come. Okay, and it's been phenomenal. Obviously, the markets have been good. Looks like they're going to be good again. And again, like I said, why your pension fails, why funds are handicapped. I've just posted that yesterday. Or this morning actually, and it's really, really good. It explains exactly why your workplace pension in funds is a bit screwed. Please have a look at the campaign for 1 million, campaignfor1million.com, and I will see you soon. Thank you all very much. Don't forget to check out my Telegram, or if you're on YouTube, like, subscribe, share, all those wonderful things. Thank you. And if you're on the Great Investments Program, look at the detailed version of this on the private channel.